Good morning, ladies and gentlemen. How are you all doing today? Welcome to Ask Abhishek Raj weekly mastermind trading session in which I'll be gearing you up for the entire week. How you should be approaching the markets, what exactly should be your view on the overall market, what are the stocks to track, and what exactly are the sectors where you should be putting in your money. So let's quickly start the day. Let us see how exactly the week has been shaping up. What are the data points? So let me share my screen with you. So let's start the day with a very positive message and one of my favorite quotes. If you are interested in doing something, you will do what's convenient. But if you are committed to do something, you will do whatever it takes. And that's what trading is. You need to give whatever it takes. It's not always about buying and selling. At times, there are moments where you need to be cautious, where you need to be sitting on the sidelines, waiting and watching for your opportunities. Remember, I have told you many times in past, uh, trading is just like a sniper shooting. I know, I'm sure many of you would have played Counter-Strike or some other sniper shooting game. So what happens? You aim with your sniper, wait until you have the target on your point, and then you shoot. So that is how markets are shaping up. And currently, you have something very important to target, and that is a massive bull rally. I'll give you the reasons. During the session when we talk about the indices, the data, and everything, I'll give you lots of reasons why we are going to witness one of the biggest bull rallies of the entire history. So let's start the day. Let's start with looking at the data. Uh, Bottom line is the entire index, the entire market, apart from pharma and IT, did pretty much well, with reality doing best with over 9% gains in a week. Nifty metal, which was the sector of the week that I had given in the last on the first episode of mastermind session, that did pretty much well with almost 5% positive rally. We had a positive view on banking. They did pretty much well. Energy was over 2% positive. PSU banks 4% positive. Nifty Bank was 4% positive. Nifty was positive by almost 1.5% to be more precise, 1.43% for the entire week. So overall, a broad market rally, a good market movement with volatility rising by 0.84%. So the fear factor that we are going to start the week with is little higher. Now, what do we mean by the fear factor? It's just some reasons which creates volatility. For example, we have US elections coming forward just after 10-15 days on 3rd of November, and then we will have a prolonged period of almost a month when the president would be finally elected and decided who is going to rule the White House. So my point is, what happens is lots of investors are quite skeptical about it, because of which they take lots of precautionary bets like buying of puts, taking precautions, selling of their portfolios. That creates a little bit of panic in the market, and that's the fear factor. However, as I said, fear and greed both are disastrous in the market. So anything that we call a fear or a greed, anything that we can categorize as emotion, you should not be looking at them. Rather, you should be utilizing them as an opportunity. 90% or 80% of the investors lose in stock market. Why? Because of these emotions. And if you start going against those emotions, you'll probably be on the winning side of 20%. That's an important lesson you need to take. So let's look at the other things. Let's look at the fund flow. Foreign institutions have overall bought about 13,000 crores, over 13,000 crores in cash market. On index futures, they have purchased over 1,300 crores. On the stock futures, however, they have sold about 5,200 crores. So if you review the data of the month of August, they had been selling initially in the few F&O segment. Post that, they sold into September. So what I'm trying to say is, usually the derivative selling is done for the short-term period, not for the long-term view. In the long-term view, if I would be negative, I would prefer offloading my portfolios, my cash stocks. So we have not been witnessing any kind of selling from the foreign institutions on cash front. So we are not expecting any big downside movement going forward. We should be rather looking at the upside, and any kind of dips should be utilized as an opportunity to make money. Now, let me take you to the charts and let us discuss what exactly markets are doing. and what you should be expecting from the markets. First of all, this is Nifty chart. If you Nifty's daily chart. Now, if you take a look on Nifty's daily chart, apart from these two big this particular big candle and the candle right within this candle, this is the one where bullish momentum started. This is called a bull shash candle pattern. This is also called a bullish harami candlestick pattern in Japanese candlestick techniques. However, a bullish reversal on an uptrend doesn't make sense. However, this is going to act as a very, very important downside support. So the point is Nifty has been trading in, I would say, 11,800 to 12,000 range. That's a 200 points range. If you just ignore these two candles, then you have 5 days here and 5 days here. So almost 10 trading sessions traded between this 200 points range only. And in case you include these 2 days as well, the range little bit extends to 11,700 on the downside, nothing else. So broadly, you have a trading range of 11,800 or 700 on the downside. On the upside, 12,030 levels or 12,000 levels. So I personally recommend to buy on breakouts. You know, it's a time we need to wait and watch. So even for trading, don't be aggressive. I'm sure if you would have followed me, we have been buying from quite bottoms of the market. So this is a time when we should be offloading a little bit of portfolio or protecting our profits and utilizing the volatility that would come in the markets to add more. So don't be aggressive at this moment, just wait and watch. See, you cannot be always accelerating in stock market. Even while driving, what you do, you accelerate when you have a good scope and you see the road ahead clear. And when things are difficult, you just take a pause. At times, you might even need to park your car aside. So this is a time, wait on the sidelines, see where is the market or money flow going. In case the money flow decides to go above 12,000 levels or breaks out above this consolidation range, join the party. And in case you see a retracement happening, then I'll share more price levels where you should be looking at to buy or sell any kind of trades. So that's about Nifty. Now let's take a look on Bank Nifty. Bank Nifty, again, the view is the same that we had, positive to consolidation. Even Bank Nifty is doing the same thing. It's consolidating between 24,000 to 24,800. Let me show you the chart of Bank Nifty. So see, this is the chart. More or less, Bank Nifty looks more positive in comparison to Nifty. The RSI on daily chart is sustaining above 60. That's a good sign. And on weekly charts, again, we have taken support on 40 and then going very close to 60. Okay, it would be important to see whether this week we are able to cross 60 or not. Even on the monthly chart, we have taken support on 40. So more or less, it looks like to be a sideways to positive market. No negative for sure. And one thing very important, if I assume that Nifty closes the entire month, anything above 24,000 levels, it would actually be making a bullish engulfing pattern on monthly chart. That's going to be very, very strong. And that is one of the reasons why I am quite positive on the markets to start a new different bull rally altogether post US elections. And it is going to be a great money making period. If you are not yet associated with the market, it's the time to jump in, and you may get some great bargains to buy when markets fall or corrects, or to be more precise, kind of gets into a volatility mode due to elections. So any kind of falls during the elections can give you good opportunities to buy stocks cheaper. Now let's take a look on other sectors. What do we have? First of all, auto index. The last candle is a hammer candle. That's very nice. It's taking support around 20 days moving average. That's one thing very positive. ADX is declining. However, RSI is above 60. So more or less, it's an uptrend to a consolidation. I would like to buy auto stocks in case the index goes above 8,200 levels, or it goes below the 20 days moving average. But again, considering some fundamentals, there is good festival season sales that we are getting internal reports on. Sales are going to be pretty good, especially for Maruti and Tata Motors. So some auto stocks is something that you must keep on your radar. Even on the last session, we had a buy call on Tata Motors, and I have one more auto stock to buy in today's session as well. I'll just share with you in a while. Let's take a look on Nifty. Nifty Energy looks quite interesting. If you take a look here, Nifty Energy had been consolidating, and last big red candle from where we made a bullish harami pattern or a bull sash candlestick pattern after a big bearish candle, and inside the body spinning top, that lows has not been broken, and now on the Friday session, we opened and closed both above 20 days moving average. And now if you take a look on this red line, the slope has started increasing, which actually means the 20 days moving average is now in the rising trend. So if this continues, we could be looking at some good buying opportunities and good money making opportunities. So continue your long positions into energy stocks until the index closes below 14,800 levels. So that's about energy. Auto we have already discussed. Let's take a look on Nifty Pharma. Nifty IT. Nifty IT is something that can be a short selling opportunity in case we witness any volatility. In case it breaks out. See, I'm not negative on IT as of now, and I'm not positive too. The point is Nifty IT was going up. On the last week's mastermind session as well, we had warned you to keep a watch on Nifty IT for a confirmation on bearish reversal pattern. And if you take a look on this chart, what has happened is after uptrend, we had a bearish engulfing candle, a big bearish engulfing candle, followed by a range of consolidation for 6 trading sessions. So it's a small trading range of 21,200 on the downside to 21,900 on the upside. This is the range of IT index, and now it's trading very close to 20 days moving average. So what you need to do is in IT index, wait and watch for a breakout either below 21,200 or above 21,900. And post that, you can initiate your positions. In case you get a breakout above 21,900, just buy. In case you get a breakout below 21,200, we can have some short selling opportunities. However, we'll decide that post analysis of the volumes and the real market conditions. Depending upon the real-time scenarios, I'll keep you posted, because as of now on weekly basis, we do not have a negative view. That's one thing for sure. Let's take a look on the weekly chart of Nifty IT. So on the weekly chart, if you see, we have, after a good uptrend, we have 2 indecisive candles. Now, indecisive candles after a big green candle, big positive candle. So on a weekly basis, we are consolidating post an uptrend. So we cannot go negative as of now. We have to wait and watch. That's about Nifty IT. Nifty Pharma. Nifty Pharma is negative both on daily and weekly chart. Nifty Pharma has been trading way below 20 days moving average. But one thing to notice, if you look at the last 4 candles rather, these all are indecisive candles. Especially the second last and the third last are hammers. Hammer in a downtrend is the right opposite to a shooting star. So hammers may be retested, and hammers can be a good sign for the downtrend getting over. So we would not initiate any short position as of now unless until we get a confirmation and Nifty Pharma closes above 11,800. That's 20 days moving average. So unless and until we have it above 20 days moving average, we would want to wait and watch for now. So that's how our view is on pharma. We are negative. So in case we see any panic in the market, our favorite sectors to short would be Nifty IT and Nifty Pharma. So that would be all on the sectorial view. Let me just summarize the sectorial view. Post that, I will take you to some stocks that you could be looking at for this particular week and make some money. Nifty view, as I said. So let me summarize it for you. Nifty view is positive to sideways. Your trading range would be 11,700 to 12,030. No trade in this range. Reasons: ADX monthly bullish, rising. That's very nice. Weekly, it's bullish and flat ADX, but so bullish. Daily, bulls are rising and flat. So more or less, it looks like we are into a long-term positive momentum. However, on a short to medium term, we are kind of sideways. So long-term positive, short-term sideways to negative. So what you do, in case you get a dip, just buy. RSI, that tells you the market's strength. Monthly RSI is at 60 resistance, which means it is sideways until we get a closing above 60. We will not be seeing that massive rally on the upside. Daily and weekly taking 60 support, which actually means on a medium to short term we are already positive. However, on the long term we are sideways. So more or less Nifty is positive to buy. That's what I'm trying to say. So in case you get a dip, just use that to buy. But it shouldn't mean that you're buying on a downside while markets are down. No, you don't do that. When markets go down, you wait and watch for seeing any reversal from prices to take support and start moving up. Then you buy. Bank Nifty view is positive and short term it's range bound. Your trading range is 24,800, 24,200 and 24,000. So unless and until we are trading in this range, no trade. RSI on monthly looks taking resistance on 60, weekly and daily taking support on 60, just like Nifty. ADX is bullish and positive. ADX is rising with bull. So there's one more reason why you should be more aggressive on banking stocks. Axis Bank, HDFC Bank, these looks amazingly great. So currently market is in range bound. You should be using the dips to accumulate good quality stocks. Metal index bullish, IT as I said negative to sideways, consolidating after a fall. We need to wait and watch for a confirmation on bullish or bearish reversal. Pharma weak, energy bullish reversal happened. Nifty auto bullish to sideways. So now let me take you to some stocks which you need to be looking at to buy. Number one, Tatasteel. If you take a look at Tatasteel, the RSI here has broken above 60. MACD is going up. The best part, if you look at this entire rally, the one that has started, it is being supported by good volumes. So the sector of the week that we had in the last week did 5%. So within a week, people made over 5 to 7% money. Now it's a time, continue your position, your profits will keep on increasing. All the best for that. So Tatasteel, uptrend with RSI breakout, chart supported by volumes, very good reasons to buy. NTPC, increasing volumes, increasing power consumption will be boosting the margins. It's a festival seasons. Uptick is supported by the volumes as well. So overall NTPC that we had picked up on the first episode, that is the last week, we continue our buy position into it. Third is Larsen and toubro. It's a stock that can make a fortune for you. Rising ADX, bullish ADX after a rectangular consolidation, a nice breakout with volume. What else you need to buy? Look at the 20 days moving average, the green line that has got an upward slope now. So 20 days moving average with an upward slope, rectangular consolidation broken on the upside, the entire rally supported by good volumes, ADX rising and bullish, means the strength is there in the rally. Just go and buy. Add more on declines. Unless and until ADX starts sloping down, just keep holding. And again, Maruti that I have also given. Maruti is something that you need to be looking at. Festival season sales are doing pretty much well. So Maruti, good volumes, a bike and a big bullish engulfing pattern with good volumes. You don't need anything else to buy. So that would be all on stocks front. Let me summarize it for you. You need to be looking at Larsen and toubro, NTPC, Maruti, Tatasteel to buy for this week. Now, something special for you to handle the elections volatility. See, the point is we are most of the times trading without any thought process, without any perspective of the markets and what are the possible scenarios of the market. That is the reason why we are always skeptical about the market. That is the reason why our emotional levels are always high. There is fear, there is greed. The moment we see a breakout, we are like, oh my God, I should be buying. I'm missing out the rally. The moment we see a breakdown, oh my God, markets may crash, just because we don't do the data analysis. So let me share some data and correlate it with the current market scenario and what is the road ahead for it. So I have taken into consideration last two elections. That is of 2012 and 2016, and now we are into 2020. Now look at this entire chart. So if you see where it's written pre-election rally till this point, this is where the elections had happened. So if you look at the chart, what I'm trying to say is before the elections, markets were already bullish. Post elections, after a small correction, we continued our bullish movements. Now let's take a look on 2016. Now this is 2016. See, RSI was already sloping. Bears were already in control. If you look at this area, bears were already up. RSI was flat. Bank Nifty was already trading below, Nifty was already trading below 20 days moving average. So, and then this is the election period where you see extreme volatility, a trading range of 8,500 on the upside to 7,600 on the downside. So more or less 1,000 points range. My point is the bearishness, the volatility did not come because of elections. Markets were already negative. So what I'm trying to say is on the elections, after the elections, the market movement resumes the existing trend because election is just a small event that comes and goes. Remember, markets are run by businesses and businessmen have no enemies, be it the opposition or the leading party. They make friends. Businessmen don't make enemies. Very simple. That is the reason why you would have seen whenever there is a change in government, of course things go haywire because of the systematic changes. For example, when a UPA government went out of power, we had a down circuit. But what happened after that? Markets went into a big upside rally. So all I'm trying to say is nothing new has happened in the market and nothing new is expected to happen in the market. Markets resume their trend. You don't need to be looking at the elections even. All you need to be looking at is charts. So what charts tell us? Markets are bullish. We may have some volatility and the bullish momentum will continue. Rest, we all have our trading range. We are prepared for a consolidation to break out on the downside and the upside. We'll trade accordingly. We can go bullish and bearish both, hardly makes a difference. So that would be all. Hope this helps you to manage your portfolio, your trades and position during the volatile sessions ahead. Thank you so much for watching and listening. Abhishek Raj at your service. Anytime you have any queries, questions, doubts, feel free to reach me. Don't forget to like, share and subscribe. Abhishek Raj signing off. Wish you all a very lovely week ahead. Thank you so much.